Okay, guys, welcome on board to the first class. Sorry, I actually did the first video, but I was actually feeling very sickly at the moment I was making the video. So I believe you listening to me right now and going back to watch that video, you should notice a great difference in our voices, in the voice, a lot. So yeah, what I'm going to be doing in this video is we don't actually have so much time on our side, and this very knowledge that we're about to share right here is actually very much available on YouTube, just as it's available on Google. It is something you can actually go read up on, gather more knowledge when we talk about origin of Forex, terminologies used in Forex. Those are proper things that even people that are not traders actually know. So feel free to actually Google this and go on YouTube. What I'm going to be doing is touching a few things that are very important for the class, and then we dive into the class. Over time, more and more terms are going to be coming out, and we're going to be discussing them and giving you full understanding on what they are. Like I said in the beginning of the class, I'm not so much of a theory person. I love practicals. So let's actually dive into what we're going to be discussing today. Now, as we already know, Forex as a trading exchange, as a market, is the largest market in the entire world. Yes, like every country, every business, every market sector actually exchanges money regardless of what area you find yourself. I live in a very rural area. This is Lagos, the rural area. Those in Lagos, we know I'm Laba International. That is where I actually am currently located. I would be relocating sooner or later, but for now, I dwell there because of ministry work. Those that know me know I'm a man of God in training. So I'm still under I'm under someone anyways, and I'm training. So for now I can't actually move out because I've not gotten to the level where I can actually strike out on my own, or should I say the spirit of God has not moved that I do such. So let's actually move into the class. So now, even here in Alaba, that is a very local market, we still have people that purchase in dollars, have a lot of marketers that deal with so much different currencies than we have available in the country, than we actually need in the country. So people don't just do business with just Naira alone. I actually saw a woman that deals with collecting like this little savings that they do here in Nigeria known as akao, this account woman, and she was actually saying, I want to exchange this money, and she was bringing out dollars. And I was watching her, I was like, yo, I thought you're an account person, what are you doing with dollar? And she said, I have it available now, I can switch it whenever I need it. And that is actually foreign exchange happening just right there. She was giving it to a Muslim, this black market sellers and buyers, I mean black market buyers, to exchange to dollar. And now that's actually foreign exchange, the conversion of money. She said she purchased that dollar when it was very cheap, when it was I think 600, and she has been keeping it. I think it was 500 when she purchased it. She purchased $20 when it was 500. So she actually purchased that very $20 at 10,000 naira. And now she wants to sell it while it's at 750. So she would be making around 15,000. That is an extra 50% gain made just from holding that money for about a few years. I'm not even sure if it's up to it's actually a year plus, because last year dollar was still at 550 at the beginning of the year. So that woman has made a whooping sum of 5,000 naira. It's not much, but for her, I'm sure it was a whooping sum. It was a great amount made just from holding 10,000 naira. I'm even sure she would have gone home with a little bit of regret, saying she should have held at least 50,000, at least 100,000, so that she would have made 50 grand. But all that's the same. I think I've actually briefly explained what Forex is, what is all about, the exchange of money. But now that was in the days of Abraham. Yeah, that was in the days of Abraham. Currently in our day, in as much as the market has gotten so huge, as you can see on the screen, Forex market is currently running with about $6.6 trillion. Oh, I didn't even add dollars there. $1 trillion in transaction being done on the daily. Okay, it is literally the most liquid market since the days of the Babylonian Empire. Like, making that as a point, an area for you to actually mark. Since then, it has been the most liquid till date, and even today we have 6.6 trillion now happening. It wasn't the same back then. I think last 2 years it was about 5.5. And this year we already have, it was around 5.3, 5.4, 5.5 last year, last 2 or 3 years. And then this year I'm seeing 6.6 trillion, meaning this market is ever growing, is ever and is enlarging. For as more long as new countries are opening up to doing business with other countries, for as long as new countries are accepting new policies to do business with different other countries, then this market will continue to grow. So now, what does the forex market entail? The forex market is like encompasses every other market. There's every other different markets on the inside. The bonds, we have the bonds. I forgot to add them on the slide. So you just listen. We have the bonds, we have equities, we have metals, we have fiat, which is our currencies, we have stocks, we have cryptos, even on the inside of foreign exchange. Yeah, because I think it was last 2 years when Tesla started accepting crypto for their payment, and I can tell you that opened up some countries and some major companies in certain countries to start accepting crypto when, yeah, Elon Musk made that move as the last 2 years. I believe we all should know about that as well. And then last year everybody wept when the crypto crash happened. So now moving on, due to we have so many companies in the market, so many people participating in what is happening online currently, what we do now is that due to this, as you can see even on my screen, you can see we have a screen looking up here, you can see a chart. Now we have not gotten to this anyways, but due to the market has gotten so digitalized, things have gotten so digitalized that you don't actually need to go to the bank to exchange your dollar. Those that own a domiciliary account here in Nigeria, you know that you don't actually have to go to the bank to withdraw your dollar and then sell, unless you intend to do so, maybe because you have somewhere giving you a high rate that is not the bank. But from the bank, you can actually on your phone convert your dollar to naira. Those that own a gray account or payday, you all know that these things happen. On payday, you can actually fund a little money and you can swap it to dollar just in less than 15 minutes. You can do that and you can send it to anybody, anywhere you want to send it to. Now, moving on, what is the advantages this holds for us? Since it is now digitalized, we are able to learn trends, learn the strength of an economy, learn the strength of a currency. We're going to be discussing currency pairs eventually, and we're going to be touching down on currency strengths during the fundamental class, telling you how to take advantage of them and make money. But I'm going to just give a brief explanation of what it looks like, how to make money with it. Now, I'm not going to be explaining technicals because that is, we have an entire 6 months to look into that. But for now, I'll just touch how do we make money, currency strengths. Now, if we have two pairs, I am not opportune, I don't want to write on the screen, but I guess I have two. If we have two pairs, which of the pen should I use? Let's use this. If we have two pairs, so I wanted to see if there was a way to increase the size. So if we have two pairs, we have USD, let's use Naira. This is Naira. I live in Nigeria, so I feel that's literally the best example against the dollar. I think this arrangement is quite wrong, so I'm going to see if I can clear that and rewrite. Erase all inks. So let's do the dollar. This is our base, and then the quote is a Naira. Now, someone will be like, why do I have to change the arrangement? Is this way because we are buying, we are making payments with this to buy this. So $1 will be equals to, let's work with 500. That is not the current economy of Nigeria, but let's use that for an example. So let's say this is what we have. So I'm about my very bad handwriting anyways. I'm not too good with the pen on this presenter, and I don't want to add my own pen here so that the screen doesn't look so tattered or so bad. So now moving on, if we are able to spot, let's say in 2020 when dollar was, let's say 500 to $1, we're making an example. if you are able to spot that the swearing in of Buhari as our president as a then was going to destroy the economy of the country, make our country so bad, and you were able to spot that this would happen, then if you had about 500,000, 500K, you would have gone ahead to purchase about $100,000 with this. And you would have probably withdrawn this from the bank or left it in the bank and just kept it somewhere. Now, when you keep it somewhere for 2 years, for 2 straight years, oh sorry, 3 years actually, this is 2023. So you keep it for 3 years, and then we come in this very year, and this $100,000 is now 750 per dollar. It means that automatically you would have roughly 750,000 naira seated in your account. You would have made 50% equity just from understanding what is happening. Okay, now what is so fun here is the fact that this is all digitalized. You don't need to go to the bank to purchase this. On your phone, you can actually make these moves. But what now makes Forex fun? What makes Forex fun, more fun than this? You know, what we discussed here is fundamental. You just dealing with the banks direct, and then dealing on your own as an investor. You are doing an investor move. But now, if we are actually working as Forex traders, what we do to catch the money moves is these trends on a lower scale, on your 1 minute time frame. There are trends that happen. There are trends that happen. I don't even need to draw. I don't need to draw. We already have something on the screen. Now, if you take a look at this from this batch of what we have on this area in here, if you look at this area here, you will see that from here we have this trend that has been moving down, and then from this area it starts going up. Now these movements can happen in a day. This entire movement we have looking out here can happen in a day. Now if you are able to pick up this trend and you're able to spot the break, this break or structure that happened in here, before you even spot this area, you would have spotted there's a small trend here that was broken here, and there is a retracement here. I believe that was what they actually brought out here, but there was a retracement that happened somewhere in here. You see this red move that came out here. If you're able to spot this, you should have been able to purchase this currency here. So let's say, for example, this is when dollar was at 500, and you were able to spot when it will go up to 750. You would have been able to spot this and buy it. Mind you, the movement happens in less than a day. So that means the 50% move you made in 2 years of holding the dollar, someone that is working with us as a Forex trader would have made it in 2 days, would have made it in 1 day. And you have been waiting for how many years? 2 straight years. Actually 3 years. Okay, this is May. Yeah, 2 years and a half to make 50%, and someone is able to clear it out in less than 24 hours. I'm sure it's less than 24 hours, because just the London market is enough to do all these things you see. No, it won't even do all these ones. It will just do this big one you see here. And funny enough, this will happen in less than 3 hours, within the hours London time, within the time of 1:30 to 1:30 in the afternoon, or that should be 13:30 to 15:50. That is about going to 3:50. You should see this move happen, and everybody will be shocked. And you, Mr. Investor, you have been seated somewhere. You are waiting for 3 years, waiting for 3 straight years to see this happen, and someone is able to clear it out in just 1 day. In just 1 day, being able to spot strength, being able to spot the strength of the market. So this is what we are going to be doing in the coming classes. We're going to be spotting trends in the market, and we're going to be taking advantage of them. Now, the problem I've had so far since I started using this pen is the fact that I don't really know how to turn it off. Okay, So moving on. Next, terminologies. Now, the next thing I wanted to touch is terminologies. Like I said, more on the class will be discussed as we go in on and on. We're going to be breaking things down and we're going to be explaining them. Now, first, one thing I want you to get into your head is bullish, bullish and uptrend. That is number one. Now, when we talk of bulls, we're talking of the people that are buying, those that are anticipating the market to go up. Those people that the only thing on their mind is, I want this market to go up, let it go up. That is the only thing on their mind. These people are known as the bulls in the Forex market. Then when we talk of bullish or uptrend, we're talking of a market that is moving up. For that, this batch of price action from here is a movement that is going up, so that we can say is an uptrend, okay, or the market is being bullish. So when you hear someone say, I am looking at GBP USD and I'm bullish, it means that he or she is looking at GBP USD and he or she feels that it would go up, meaning he's looking for buys and nothing more. Then in a case where you have someone being a bear, that person is someone that's looking for sales, and being bearish is expecting the market to go down, which is this batch here on the left, a market that is pushing down. Like I said, more on this will be done in the upcoming classes, so look forward to it. I just want you to get it into your head: bullish, bearish, and bears and bulls. Quick assignments, please go onto your chart, open up your phone, you have your MT4, you have a trading view, open it up, spot a market that is moving up. This is, I showed you the example here, what it is. Spot something like this, screenshot it and send it to my DM. Spot a bearish move as well, screenshot it and send it to my DM. I need that immediately. And then we'll have a consolidating market. Now I'm going to give you an example what it should look like. A consolidating market should look this way. It doesn't have a set direction, it's just confused. So find it and send me a picture. The time frame you find it on doesn't really matter, but find a market that is moving sideways. When we talk of consolidation, it means the market is moving sideways, is ranging, is not moving up, is not going down, is just, as you can see here, dancing to the right hand side. That is a sideways market. Then when we talk of longs, going longs, when we talk of long, we're talking of buying the market. So longs means to buy. Keeping it short, shorts means to sell the market. Okay, so when I say I'm going long on GBP USD, it means I'm buying it. If I say I'm going short on GBP USD, it means I'm selling. Okay, hit me with your questions if you have any. And like I said, I want to keep this as short as possible. We have taken much time on this. So moving on, we have spread. Now this cannot be best explained in the class, but I feel a real life example would be best. Now whenever you take trades, you hit up a trade on your MetaTrader 5 or your MetaTrader 5 majorly, you would always notice that the trade opens with a minus, opens with a loss. Now what happens is that these brokers, those that we fund our money with, for them to make money, they charge us what we call a spread. A spread is a commission charged by your broker when you take a trade. Now the amount charged varies per lot. Okay, most brokers will charge you $10 per lot that you open, and some will charge you about $6 per lot. Some will charge lesser and lesser and lesser. I feel majority of the proprietary firms that we trade with, that those are the people that give us funded account, charge about $3 per lot. I guess that's what I've noticed over time, $3 per lot size that you open, and that's because they are prop firms. They are still going to make money, so they don't really need the spread. But your brokerages, my brokerage, as at the time I was trading a zero spread account, was $7. But on a regular spread account, I don't really have the calculations on my head, but with which I'm not really bothered. For as long as you make a profit on a trade, you don't actually care about how much they charge you for spread. Then it is, like I said, definition, a spread is a commission charged by the brokerage whenever you place a trade. And then trades are calculated in lot size. What is the meaning of a lot? Hit up Google. I don't want to actually start adding all that here. If not, this video is going to get so bulky. But we open trades in lots. Now I'm going to explain what is important for you to know on lot sizes. Lot sizes are buying powers that we operate with when we are in the market. They are called buying power. But what I need you to know, I don't want to start saying the amount of buying power. I know one lot is $100,000 buying power, but all that is not important for you to know. What you need to know when you get into the market is when you place a trade with one lot. Okay, when you place a trade with one lot, let's hit it. It's called a standard lot, meaning one lot. One standard is equal to $10 per pip movement in price. $10 per pip. So if you should open up your chart and you have a $100,000 account and you just say, let me strike 100 lots, it means that that very trade will be taking nothing less than $100 per pip. And if the market decides to go crazy, it could push 100 pips and you've lost 10% of your account immediately, happening right before your eyes, and you're seeing it. That's why this is one of the reasons most new traders suffer, because when they open up a demo account, MetaTrader 5 instantly gives them $100,000, and they just go on a chart and they just hit up 100 lots. And when they hit up 100 lots, maybe they hit it up on gold, and gold pushes 1,000 pips before their eyes, and they are seeing $100,000 made, and they are like, wow, market, this business is so easy. And then they go fund their account. I have a friend that did that on demo. He opened MetaTrader 5. He was given $100,000. He placed a trade. He made $50,000. He placed another trade. He made $20,000. And he got angry. He got so happy. Sorry, he got excited. Ecstasy, which is one of the greatest killers in Forex. We'll discuss that later on psychology classes. We'll discuss that on psychology classes. So he got into ecstasy. He funded an account with $200. He placed a trade and the account flew to 400, and he was like, yo, this is easy. I can make money with this every day. I can milk the markets. That was what he was actually saying. And in less than 2 months, he got humbled because he lost the 400. He had 400 now. He lost 200, which was his original gain. And he was like, I can make it back. I can make it back. After I made it in the first place, I can do it again. And then, story cut short, his balance was all lost. The market took everything from him. He went home crying, and that was the end of the story. So now, moving on, we have what we call, this is called a standard lot, right? Then we have what we call a micro lot. Sorry, a mini lot. This is called a standard. We have the mini. The mini lot, which is equal to 0.1 lot. In maths, 0.1 lot, and that will be $1 per pip. Oh, I wish I could make a blackboard. Let me see if we can get a blackboard from these guys. I don't think, sorry, I don't think they do that. Okay, so this will be $1 per pip. And then we'll have another one known as the micro. We'll do more of this in real life examples when we dive on the chart, though not on this video, maybe on the next video. So on a micro lot, that will be 0.001. This is the lowest any broker will allow you to do. I have not seen less than this. This is the lowest, and this moves about 10 cents per pip. This is 10 cents per pip. So for now, this knowledge will look like it's just flying through your head. Eventually, you're going to be able to make use of it, utilize it by the time you get on the chart, which is why we have in-field experience. Remember, I told you these teachings happens during the weekends. You study them, then during the week, Monday to Friday, we have what we call in-field experience, where you are actually testing all of this in the real market, so that you are seeing, you are doing it. The market is giving you replies sharply. It's giving you instant responses, so that you are not just seeing, you are seeing it, and then the market is feeding it into your brain, so that it becomes a part of you. Now for margin, I don't really have an answer for this. Till today, it is something that I have not really bothered. It has a lot of calculations on it, a lot of explanations. It's quite complex, so I don't really stress myself to have it in mind. But the one I need you to know is what we call a margin call. This happens when you take on too much risk, and then the market automatically, depending on the brokerages, some brokerage will watch to see when your equity has dropped down to 10% of its original equity. So if you have $100 funded on your account and you just decide to be crazy and you place a trade of one lot when you know is $10 per pip, if that market should move 10 pips, sorry, it doesn't have to even get to 10 pips. If that market should move 8 pips in losses, you have $80. You have taken about 80% loss. Immediately, some brokerages will automatically close the trade. They won't even look at your face. They will collapse the trade. It's called collapsing the trade. They will collapse the trade immediately, meaning closing it. They will close it with your loss. They don't care about you. They don't care about anything. The reason why they do it that way is so that you don't end up owing them money. I saw a video of a guy, how I wish I could attach that here. The man decided to place trades on news, and what happened was immediately, I think, go on YouTube, search for Forex funny losses, search for something like that. You would see it. You see people place trades on news, and that person has $1,000 funded, and that person will just place 100 lots, and just instantly you see their balance fly all the way from $1,000 to minus 500 or minus 50, minus 200, and that person goes from owning $1,000 to owing a company $100, and it's very bad, very, very bad. So that you have to watch out. That is why one of the reasons why we actually teach how to calculate risk. We teach what we call risk management in this session, so that you don't go. So while you are starting now, please don't go and start hitting huge losses. In as much as it's demo, don't go start placing maximum lot sizes. Those of you that have opened a demo, if you want to have an experience of what margin call looks like, go on your FBS. You can set up a demo account, put $100 in it, set your leverage to 1:3,000, which is the highest there. Then come on the chart and slap a 0.5 lot. Like open up a trade, type in 0.5 in the lot size, type in 0.5. Don't put any stop loss. Place the trade. It can go in your profit anyways because you don't know what you're doing. But just hit up a trade. If it goes in the loss, watch it. By the time it's now in a loss and there is so much red, you will notice your balance is changing to red. It will get to a point, the trade will just vanish all of a sudden, and you will just see your losses looking at you immediately. Try this trading stuff around 129. Yeah, do it around 129 London time, 129, 1 minute to news. Do it so that 1:30 the news hits you, and then you can see the miracles of a margin call. Now moving on, we have SL and TP. SL simply means stop loss. TP, take profit. These are points in price. Stop loss is a point in price marked out by the trader, or should I say set up by the trader, to automatically close any trade he has running. Okay, now what stop loss does is it manages for losses, while take profit manages for profits. So if we have this chart as a typical example, and I hit up a buy here, and I have my stop loss seated down here, if this market goes up and I'm in profits, I can set this point. Let's say I can use this high as my reference, and I say, okay, whenever I get back to this high, I want to be out of the market. Sorry, I don't have a very straight line. So I use this, that's worse. So let's say I decide to use this area as my mark, and I mark out this point as my take profit. I'll take the price as this area and set it up and say this is my take profit level. So whenever this market hits this immediately for the first time, the trade will be collapsed by my brokers immediately by the self, so that I am not in a loss, so that I take my profits and I'm out of the market. I don't care anything again that's happening. And in a situation where, let's say you are on the losing end, and let's say this market comes up here and I feel it's going to sell, and I sell here, just in this white one here, I sell down here, and I put my stop loss at this high, and I put my take profit, and I say if this market comes down here, I'm going out with a profit. And you see here that instead of going down, this market just pushes up. The moment it touches this area, I'll be closed with a loss. Okay, that is basically what take profit and SL means. Like I said, this is a theory class. Eventually we're going to do another video that is a more practical section. Now please, after watching this video, I need you to give me tell me what you guys want. Do you guys want the theory session to happen live, a live video, or do you want it to be a video, just an offline video like this that you just watch? Live video means you'll be there on screen with me while I'm saying it and I'm teaching it, and you are watching it happen. While video will just be a video like this. Then moving on, base currency and quote currency, and then currency strength. Now I feel this should be taught on a practical class, so for that reason I'm going to be adding this one to the next section. Okay, I'm going to be adding this to the next section, but just so that you have an idea of it, I think I already touched it already. I explained USD against NG, against our Naira, where I said that in a case where we have to do the two of this one here is one known as the base. This is the currency the price is talking about. This is the currency we decide we want to buy, and this man here is known as the quote. Sorry about the handwriting. This guy is known as the quote. Now whenever you look at your MT5, after you see your pair, somewhere here you see price. You can see price somewhere here, and for my own I will be putting 0.5, 0.15, 595, for example, structure like this. Now when we have something like this, someone will say, why do I have 4 decimal numbers? I'm going to explain that when we do PEEP concept. We're going to be doing PEEP concepts in the next video. That's where we explain it. So now moving on here, this USD is base currency. This is the quote. Why do we call this quote? The price here is quoted in NG. Okay, so this is 750.1595 Naira. Okay, but the base, this price here we have, is talking about the base. It's telling us how much it will take to purchase one of this. Okay, so the quote we have in here, this is the quote. This is the quote. This price we have here is our quoted price. Why the currency it is being quoted in is Naira. Okay, why the base, meaning the price we have here, is talking about one of this guy. Sorry, this should be USD, right? Let me employ my eraser. This should be the first time I'll be using him. Okay, so I think I've actually explained what that is. Do I still? Okay, I don't really know how to use this guy. So this is okay. I think I figured out how to use that guy now. So this is USD against Naira. So currency strength, I'm going to quickly give you guys what it looks like. Base currency, when the base currency is strong, meaning it has more strength than this guy, we will notice the chart going up like we have here. And if it is weak and this guy is strong, then we can have this kind of scenario where the market is going down. Okay, so that is a very easy way to explain it. I like keeping my things very simple. So if the base currency is strong, the market flies high. And if the base currency is weak while the quote one is strong, then we can see what we call a downtrend. Okay, with that guys, please, like I said, go onto your chart, spot an uptrend for me, spot a downtrend, send me screenshots as soon as possible, and we'll see you in the next section.